levels.
The increasing acknowledgement of Bitcoin as an asset class by influential Wall Street personalities like Larry Fink hints at
Bitcoin to explode? New Wall Street report reveals shocking truth. In a stunning new report, Wall Street is embracing Bitcoin as an asset class. This is a major turning point for Bitcoin, and it could lead to a massive explosion in price. In this video, we'll take a closer look at the report and discuss what it means for the future of Bitcoin. We'll also talk about the unique advantages that Bitcoin has over traditional commodities like gold and silver. If you're interested in Bitcoin, this video is a must-watch. We'll give you all the information you need to make informed investment decisions. Bitcoin is about to explode. Watch this video to learn why, and how to position yourself for the coming boom. And let's get started.
If you listen to Larry Fink and these people on Wall Street, they, the phrase that they use will be, well, we see it as an asset class. So that's like a green light that says, once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very seven-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with crash JP Morgan buy silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered, and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this crash JP Morgan buy silver campaign, and we got the prices from 15 up to 50, which was the old the Hunt brothers. The Hunt brothers got it right in the 80s. In the 80s, that fell into the $50 range. They were cornering silver. So we got it back up to the old Hunt brothers $50 level. And then the feds, of course, came in and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market, but at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys, and that is what the late great, I shouldn't say late, but the former Bitcoin superstar Trace Mayer started a campaign that on January 3rd of every year, people would pull their keys off exchanges as a way to maintain integrity and to prevent these derivatives bubbles from building up to excessive price manipulating levels.
The increasing acknowledgement of Bitcoin as an asset class by influential Wall Street personalities like Larry Fink hints at its inevitable rise. Such recognition is like a beacon, signaling a floodgate of potential investments. However, while Bitcoin is surging and finding its footing, the commodities like gold and silver have faced their fair share of manipulations and hurdles. Interesting enough, Bitcoin's inherent qualities might give it an advantage over traditional commodities. And it's not just about its financial potentials, but also the capacity to prevent undue price manipulations through techniques like pulling private keys. Let's expand on that as Keiser draws comparisons between the metals market and Bitcoin's distinct advantages.
When you have huge money in these markets, they have the ability to manipulate price. And but a couple of things. I think with Bitcoin, because in order for the gold suppression scheme to work, you really need cooperation amongst all the billion banks. So there really is a gold cartel. And the risk, of course, whenever you have a scheme like that is that, you have, if you're short, obviously you have a risk on the upside. But with gold, under the best case scenario, even let's say a war is started, and we've already had a couple of examples of that. It didn't really have much of an impact on price, but I mean, we're saying the price maybe could jump 10, 15, 20% with gold. You're risking 10, 20% on your short position to skim, 1% every couple of days in perpetuity, right? So that's a risk these banks will take. But with Bitcoin, you really, if BlackRock or the Saudis or somebody came in and said, we're putting an order in for $500 billion Bitcoin, and the price goes from 30,000 to 120,000, that's a huge move, and you're going to get wiped out if you're short. And so it's going to be difficult to maintain an anti-Bitcoin price suppression cartel because the upside is just too incredible. It's you're talking millions of dollars a coin. And so there will always be at least one of these players to drop out of the cartel. You won't be able to get a cartel organized. So that's one thing that Bitcoin has in its favor. Additionally, it's easy to pull the keys. And then thirdly, you just have in the background the ongoing collapse in fiat money world. I mean, the fiat money world is really at the end of a 300-year period or experiment going back to the creation of the Bank of England, and this idea that fiat money could work. I mean, we know after 300 years that it never works. They all go to zero. None have ever survived or lost 99% of their purchasing power. So I think we're entering a new epoch where the fiat money is going to be history. The CBDCs that are coming up by central banks are just an attempt to reinvent fiat money. It's not going to compete with Bitcoin. People are going to see Bitcoin as the path away from centralization, CBDCs, and everything else that comes with it. And they're going to continue to embrace Bitcoin as a way toward economic freedom and just freedom in general.